In this video, we are going to be analysing GCG because it was requested in the comments. Now, to get straight into it, firstly, one thing I want to note as soon as we get into this stock. So this is a 3-month chart. From this alone, it is a very ugly stock. Definitely not a stock I would want to touch long bias. I mean, look at that. It is just a steady downward move. Barely any bounces. You've got like one small bounce there, a tiny one there, and a small one there. Apart from that, very steady, just straight to the downside. So really, this is just trying to catch a falling knife if you're trying to catch this long. Now, the other thing to note is we do have our levels plotted out. You can see these two grey dashed lines here. These are the statistical means. So basically, between these two values is what you would consider fair value on the stock. You can see right now we are below this fair value. Now, this doesn't mean we buy it up. All this means is if the fundamentals check out, because again, this is a technical indicator. This doesn't account for the fundamentals of the company. So if the fundamentals don't check out, the technicals aren't going to matter. But in this case, it is at or below fair value. So if we were looking at investing in this company, now is a great value, but it's do the fundamentals check out? And considering how this stock's trading, I wouldn't imagine so. So I'm not really going to waste my time going through a company like this because not something I would touch or invest in. But considering how it's traded, I can't see their fundamentals being all that strong. So it's one key thing to be noting. But if you were looking to invest, really where we are now is a good investment level. But again, it's do the fundamentals make sense? Do your due diligence if you're looking at investing in this. Now, what my main focus is on a stock like this, where you basically just have these mega downtrends, is I want the pops. And by that, I mean I want to see a move to the upside. Now, I want to break fair value. I don't care to trade that. But again, really from a trading perspective, I will never trade off of this level. I will just trade to it. But considering I don't want to be buying below it, I'm not trading to it. So instead, I want to wait for the break through this level. And really, I'm not paying attention to this stock at all until we can come to $1.75. Once we can come to $1.75, that's where I can start looking at trading this stock. And the only way I'm looking to trade this is short buys. So looking to trade short buys at the 175. If we broke that, we have 215. Now, if we short the 175, my main target is going to be 125. Because again, that's the next deviation. And the same thing if I'm looking to short the 214, my main target is going to be 175. And if I want to hold any more, then 123 is going to be that final target. That's really my main outlook on GCG, considering those are the targets that are close or the levels which are closest. But again, from here, it still requires over a 200% move to even get to that level. So is it going to happen? Probably not. Again, we're only analysing this because we were asked in the comments, but not a stock I'm personally looking at all myself. Now, if we broke higher, we break above that 214 and we push even higher, then again, we have more short bias levels at 270, 310. Now, these are our second deviations between the 6-month and the 1 year. Strong, heavy resistance if we can come into here. This is where I would probably start paying attention to the stock. If it can come into here, we would be extremely overbought. Again, looking to trade that to the downside. And what I quite a lot with these levels, as well as if we zoom out that bit further, say we go to a 1-year chart, you can see that these levels just play out quite nice from previous data. You can see that's where you got the gap fill location to come to as well. So I quite like that. You can see it was a previous high. So again, not only is it a deviation level, but it lines up with relatively easy to see technical levels, which you don't really see as much on these first deviations, or at least not on this 175. The 215 on the other hand, you did come there. But again, and back there. So that 215 is a bit stronger, but my main focus is on the 270, the 310. And I probably won't trade that 175 just because I'd rather wait for that extra push to the 215. And if we can't get there, I'll just skip the trade and look at other things. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.